So hello everyone, we are from Samsung Electronics Limited Company. We are going to present our analysis for the financial statement. My name is Latifah.
And my name is Tiara Noviany.
We make this video to fulfill our task for komprabis or komunikasi and then presentasi business. So the first one is we are going to explain the company profile from the Samsung Electronics. Samsung Electronics founded by Lee Byung-chul in 1938 as a trading company. They have their office headquarters in Seoul, South Korea. And here is the business area. There is three main of business area. The first one is consumer electronics, the second one is IT and mobile, and then device solutions. So in this analyze of financial statement, we use two kind of analysis. The first one is common size analysis, the second one is ratio analysis.
The first tool that we are going to use to analyze the financial statement is common size analysis. So, common size analysis is tools that use to evaluate financial statement by expressing every component as a percentage of the base amount for that period. We use two kinds of common size analysis. The first one is balance sheet common size analysis, where we use total asset as the base value. And the second one, we use income statement common size analysis that use total sales or total revenue as the base value. And these are the balance sheet common size analysis for Samsung Electronic financial statement. We only display some main accounts because we summarize the financial statement. There are 8 components. The blue one represents cash and short-term investment. The orange represents the account receivable. The gray represents inventories. The yellow one represents other current assets. The blue represents net PPE. The green one represents investment in advances. And the blue navy represents intangible assets. And the maroon red represents other assets. As we can see that there are 3 years of the financial statement that we analyze. The first circle from the inside is for 2016 financial statement. The second circle is for 2017 financial statement, and the outer circle is for 2018. First, if we see the portion of these 3 years balance sheet common size, we can see that there is no big difference, and there are some accounts that the percentage remain the same, like the investment in advance and the total account receivable. If we see from the chart, the PPE and cash and short-term investment have the biggest portion in the financial statement. As we know, the Samsung Electronics sells many electronics items, so it is proper that the company has a lot of net PPE because they need fixed assets to produce their products. For the other assets, there are no significant changes from year to year. The second one is income statement analysis, where we use sales revenue as the base. The components that we use are cost of goods sold, selling and administrative expense, other income and expense, income tax, minority interest expense, and net income. We can see that they get 11% to 18% net income from sales revenue. The biggest component of the revenue is cost of goods sold and sales and administrative expense. The unique thing is we can see that from year to year, the income tax that they have to pay is increasing.
The second one is ratio analysis. We use three kind of ratio analysis. The first one is liquidity ratio, the second one is profitability ratio, and the third one is activity ratio. Liquidity ratio indicates whether a company current asset will be sufficient to meet the company obligation when they become due. And profitability ratio, as in name, we are going to use it to measure the company's performance in generating profit and return. And the third one, the activity ratio, it will measure the company ability to convert different accounts within its balance sheet into cash or sales. Let's go back to the first one. So the first one is liquidity ratio. As I mentioned before, uh, we compare the current asset and the current liabilities. In this three of ratio of liquidity ratio that we use. The first one is current ratio, the second one is quick ratio, and the third one is cash ratio. The ratio is still more than 100%. It means that they always, from years to years, they always have enough current asset to pay their current liabilities. Even if we see in the lowest one, in the lowest point in for quick ratio in 2017, the ratio is still 185.01%. It means that they still have 85.01% current asset that exceeds their current liabilities. So, um, as we can see, if we remember in the balance sheet common size analysis, the portion of their cash and short-term investment is really big. So it fits the ratio. That's why they have enough current asset to pay their current liabilities. The second one is profitability ratio. There is 5 ratio that we use. The first one is gross profit margin ratio, return on equity ratio, operating profit margin ratio, return on asset ratio, and the last one is net profit margin ratio. We are going to focus on gross profit margin ratio, this one, and then operating profit margin ratio and net profit margin ratio. Why? Because we can see that from gross profit ratio and the operating income ratio, there is such a big gap because the expense is really high. That's why the gross profit and the net profit is really, the difference is really big, also really big. And then the second one is activity ratio. We can see this fixed asset turnover ratio, the gray one. Their turnover ratio in fixed asset is exceeds the turnover in total asset. As my friend mentioned before, that this company is really depend on their PPE or fixed asset to produce their product. So it's proper if they turnover ratio in fixed asset is higher than the total asset turnover ratio, because they have to keep upgrading their machine, their fixed asset, to have an efficiency in production. Uh, the interest the interesting things is their account receivables turnover ratio is really high. Is 700 is 700%, and then increase to 800%, and then decrease to 700%. It means that 700 is 7 times from 100. It means that their turnover of account receivables is really high. That we can see in the balance sheet common size that their cash is really big. Their portion of cash is really big, but the portion of account receivable is really low. So it means that's really good, because they can make sure that their customer can pay the account receivable quickly. So that's all for the chart and the explanation. You can see the calculation of our chart in the appendix. There's common size analysis for balance sheet. So as my friend mentioned before, we summarized the financial statement into some main accounts. So, but in the appendix, you can see the details of the accounts. So just go check the appendix if you want to know more about our analysis. Thank you, and sorry for all the mistakes. We're looking for your advice for us so we can make a better analysis in financial statement. Thank you. Goodbye.